All right, ladies and gentlemen, welcome to the third week of 2024. I got your watch list for you. I got the plays and all the events for the rest of the week, but I thought I would start off this video with a couple of fun facts as we are getting the year started. And to start with the first one, we are 3 days away from another government funding debacle, 69 days away from the first rate cut if we get that in March, 82 days away from the national debt going up another $1 trillion, 172 days until the U.S. yield curve would reach the longest period of inversion since 1929, and then 299 days until the election. So if that doesn't get you excited and that's not fun enough, maybe you'll like this one. In the last 90 years, there has been only 5 other times where the Fed has cut rates where CPI, core CPI, was higher than unemployment, and all of those events, in 4 of them, there was already a recession started, and the other one was war in 1942. So as far as the market so far to start off the year is down by like 0.5%. Oil commodities, they're off by 0.5 as well. Gold is down by 2.1, and to start off the year leading, it is crypto up 2.9% and the US dollar up 1.0. So a couple of weeks in, we've had a little bit of sell-off, a little bit of buying up. We've had 2 big data sets. We don't have that much craziness this week, but we're still going to get more earnings and stuff to react to. But this whole rate cut narrative and how it is controlling everything, my oh my, is it there? Now, to get into the charts, I got 3 different ones I'm going to show to you, and I will explain these a little bit more as we get throughout the video, but I got to start with the first one. U.S. growth, mega cap versus the smaller cap growth. It is lagging behind the most that it's done in a very long time. Same thing even with the smaller caps. You go over here to freight and shipping. I'm sure you've seen what's been going on with everything in the Red Sea. Well, you have now had the biggest jump in freight over the past 6 weeks. The last time we've had this happen was 2021 with all of this stuff with the war and wheat and energy and all of that stuff. Other than that, it was September 2016 and June of 2012. And then finally, this one's probably the most important one. In the midst of everybody getting excited about the bonds and the rate cuts, the real yields have dropped. But anytime the real yields have been going up and the market has been ripping, you have been getting into a bubbly environment, and that's where now we should probably be looking, especially as data and a lot of things starts moving the bonds. So I'm going to get all into these a little bit more, especially when we go into the plays. But Chad, what I need from you, a thumbs up on the video. Make sure you're subscribed, and if you don't know, we are live Monday through Friday, 30 minutes before open, youtube.com/thestackmarket. We will see you there in the morning. Run it, baby.
Working to the couch, it's the 2020 election. Live in the hills, but I still get a spread. Started with a live, but I still reinvest it. Feel how I feel, then it feel like a blessing. I just want the lesson, I just want protection. I'm up and I'm down, but they sound like progression. Farmer never plans if he waits for perfection. Finger to the down, hold it.
All right, off the bat, we got more earnings this week. Less tech companies, Netflix, and all the other guys are going to be next week. We'll go over the calendar in a little bit, but then besides that, you will be getting some of the middle ground data. We got retail sales and consumer sentiment. The market may be prone to react, but you just had the non-farm payrolls and CPI. That's kind of been the set-all be-all, but we'll see how that plays out. And then overseas, you're going to be getting the China GDP. You just had a Taiwanese election that China did not like, and then on top of that, we're going to be getting the Germany ZEW index, and today they had data. They avoided a recession, and then tomorrow you're going to be getting UK unemployment. So we'll see if that factors in to any of those Euro close moves that we've been seeing. But as far as the earnings tomorrow, pre-market, we're going to wake up to it. You got Goldman Sachs, Morgan Stanley, Applied Blockchain, I thought it was a science company, PNC, First Bank, a bunch more of the banks, even after hours. You're going to get a couple of those. Schwab on Wednesday, Prologis on Wednesday morning, more banks, Alcoa after the close, Discover, Kinder Morgan for oil, TSMC, this might be our first chip company, and even, or not first chip, but tech company this week, and then a couple of more, and you start to see the calendar starts to get a little bit more filled, and and then before you know it, next week is going to be the tech earnings. So that's what we have for this week. As far as everything else, we do have a ton of Fed speakers, and this is where it's going to get interesting. We've heard from a couple of them already. There's a lot of new voters, and that's something I'll tell you to watch out for this week. Some of the Fed speakers we had last year, they would say stuff, but they weren't voters. But now that it's a new year, some of these guys are voters now. One big example is Bostic, and he is going to be speaking again this week. But the way I've been seeing these Fed speakers, it's kind of been 2 steps forward and 1 step back. What do I mean by that? You've had 2 Fed speakers come on. They'd push back about rate cuts. They said, no, it's not going to be soon. We got to wait for this. They'd talk about quantitative tightening, and that was good. But then the next Fed speaker, he would say something that was borderline bullish. Again, Mr. Goolsbee, he is probably one of the more bullish people. He kind of said something a little less bullish the other day, but he let it be known he's kind of on the lower end of the dot plot. But the point is, we are going to hear from them. If the script stays the same, then everybody's going to be focusing on the broader dynamic with bonds and everything else. But if it does change, those Fed speakers might be able to give us some juice this week, as we're only waiting for 2 other data sets in the retail sales and the consumer sentiment. So watch out for that. And then the final key I'm going to give you, I told you the breakdown here to start off the video. Crypto is the leader of the year so far, but the dollar is number 2. We've spent 2 weeks going down, then going up, but in the midst of all of it, the one thing that has been staying very strong, it has been the dollar. And that's something I've been telling you, watch out until Powell or earnings kind of derails this dollar strength. Otherwise, if it gets too strong, we're going to have a problem. But now, you guys remember when I was telling you about 4% bond yields kind of being anything below that, not being that good, and how the market would interpret it? Well, I have another one for you today, and that has to do with the DXY. So if you're not familiar with the DXY, that is the dollar. We use the UUP index, and you can see that on any chart. But if you come down to trading economics, you'll see DXY under Forex, and this is the broader dollar index. And what some people have been talking about is that a print below $100. So if you watch the dollar weaken very, very fast and it goes down below 100, that could be the market signaling that we have a policy mistake, and that means Powell is probably either going to have to cut too soon, or the idea of cutting too soon might cause some problems. It's going to be a little bit tricky, but I love having guidelines like this, because $100 on the dollar, ever since like 2020, this has been a pretty big and important level. So watch out for that. As far as everything else, I already went over the charts. If I could focus on any of them right now, I'd want you to see this chart right here. And what it's showing you is the abnormal outperformance of large cap growth versus value. You are watching, to start off this year, large cap companies are outperforming the value plays, even on the small cap level as well too. And this is weird, because think about how we started off this year. It was all about the small caps, and then very quickly that slowed down. Why I'm bringing this up, I'm still in my Russell plays. I do think this is going to be an opportunity of this year. Either we're going to watch this totally fail, or as things play out after this earnings and everything else, we may be watching for this gap to close, and it's on both a bigger cap and smaller cap level. So that's the first one, but like I was just showing you with the dollar, the other one that I want you to see, no, not that one, but this one, and it will relate into some of the plays, but the way people are looking at the bonds right now, you've watched a massive rally over the last couple of months, but people are still getting bullish on the bonds because they believe that the real rates right now on the 10-year are too low. Anytime we had high real rates, something would end up popping in the market, and then people started to shy away from bonds, and then the Fed would cut, and then people start to get back into the bonds. We've had a couple of things right here that have moved the bond yields or the real yields around, but now with inflation dropping the way it is and people expecting a lot more, this is giving a setup where people are absolutely loving the bonds right now. And as we move forward for this year, I would keep an eye out this. If you watch bond yields go lower and then the inflation rate goes lower, the real yields, if they keep moving at the same pace, we don't have a problem. But if inflation comes back up, the yields are low, this is where that problem would start. And then this will be one of those risk factors to watch for this year. And then above all else, like I told you to start this video, we are about 172 days away where, let's say this situation we're in now continues, rates go lower, inflation goes lower, and the yield curve stays uninverted. That will be the longest inversion of the yield curve since 1929. So watch out for all of it, but I hope these charts prepare you, because now let us get into the plays. So right off the bat, I got a couple of different plays for you, and the first one, I'm starting off with the bonds. I'm in the ZB. This is a 30-year bond future. Again, there's ETFs like TLT. That matches up with the ZB. IEF, that's a ETF that you could play through ZN on the futures, and then /ZN would be the 2-year or shy for the ETFs. I got a YouTube short on it. You could watch it, but I do think the bonds are going to be interesting over the next couple of weeks. I was holding one of these plays before. I averaged down after some of the data on Friday. It went up and then it came down, and the main story is everybody talking about rate cuts, this whole idea of Powell, real rates now staying low and being low. As long as those real rates are lower, I think it's going to be attracting a lot of money into the bonds, regardless if we keep dumping. Remember, last week was one of the biggest sells of government debt in a long time with the election coming up, funding these budgets and all of that. There's been a lot of pressure on the bonds in terms of adding supply, but with everybody showing up because of these rate cuts and inflation going down, it has been supporting it. So I'm going to be watching out for flips on these. I'm not thinking you buy and hold long and wait to the cut, but I am thinking longer swing trades or middle of the ground swing trades, a couple of flips on the data. I do think these are going to be great plays, especially depending on what we get out of earnings. And if you can't find an earnings play, that bond volatility, these back and forths, it could be a good area to be trading in. So I'm definitely going to be watching out for that. That is play number one. Then play number two, I showed you that one chart there. That was the wrong chart that I brought up, but there's two things going on right now. So here is the chart about global freight rates going up, and like I've showed you, this doesn't happen too much, and usually it connects into a couple of things. One, it has to do with shipping and then also energy costs, but the reason I'm bringing it up is that you got two very unique events going on right now. There's a huge polar vortex. The weather is getting cold. It's making UNG and natural gas go absolutely crazy, and then all these issues in the Red Sea, it's causing all of these swings in the cost of shipping. They're even hearing a little bit about Saudi Arabia and their shipping stuff of natural gas due to this. So I'm thinking we're going to get one of these volatile moments where it'll keep running until the situation calms down. But if you learned anything off of trading those last moments a couple years ago, it is extremely volatile at higher prices. You will get a huge swing. Eventually it will die and then it may not recover, but it's a giant game of Russian roulette on all of these assets, because if you're right, you're going to make a killing in all the volatility. But if you're the last one in musical chairs, you don't get the chair, then you will get absolutely clapped. But these are big themes to start off the year. They've been holding up, and I would keep an eye out for how these continue to develop. But that is play number two. And then finally, play number three. I love this one, but I got destroyed on Friday on it, and it was out of nowhere. It was Baidu, and why they got destroyed was there was a rumor that their chatbot Ernie was being used by the Chinese military. The company denied it, but people started freaking out, and they were worried about incoming U.S. sanctions, and the stock sold off, I think, about 9% or something like that, about 6.9, 7%. It was pretty bad there, considering the stock was doing good and was holding up at least a little bit better than Baba. Not as good as Pinduoduo. So going to be watching out. Either this gets a lot worse and they do get sanctioned, or it might be able to recover leading into earnings. They got about 2 or 3 weeks, so we'll see how that all plays out. But those are the main plays. As far as everything else, I don't think I did anything too crazy on Friday, those option plays. And if you are going to be on stream, I'm going to go over all of the options for you for earnings. We had a lot of fun doing it. We did and calculated all of what's priced in. We found some plays. We made plays on some. We found a way to get a lot of exposure for cheap, and one of those plays hit. It was Delta. We are now about $1.70 in the money. I need to make like $2.20 to cover back all the other plays, but the way I'm looking at it, they're breaking a level. I believe this is where they like ran up to, even I think for like COVID, this is where they kind of started to slip from. So this is a very, I gotta go back more than 3 years, man. We are getting old, man. You know that? We are getting very, yeah. So here was their COVID gap down level. This is where it's holding right now. So want to see how it plays out. Going to be riding that one this week. We still got a couple of other plays. I will be watching Boeing. We got one play that's up like 80% or so, or $2 away from the money. The other ones are going to expire worthless unless it really flushes, but these would be another area I'd keep my eye on, and then we'll see where the earnings takes us. Wake up to the bank earnings, see if there's a new narrative, but ultimately it's going to be about Powell and rate cuts. But that is your watch list, ladies and gentlemen. Make sure hydrate, healthy, ready to go. Make sure post your watch list. Make sure we see you there in the morning. I need the armor on. I need the helmet shining. And I need you to remember, the goal is always bigger than you, my friend. It's not always about you. There's something bigger. Aim for something bigger than yourself, and you will always get more for yourself. I hope you feel me, Chad, but drink that water. Stay hydrated and healthy. I will see you back on the watch list and the stream. It's going to be exciting, so enjoy it, and I hope you enjoyed your day off. But Horn.